Hello and welcome to another iSaham video tutorial. Today we're going to be tackling the question of what is an IPO. An IPO is an initial public offering that is being listed by a company. Why would a company issue IPOs, you might ask? Well, companies issue IPOs for many reasons. The first one would be to, of course, sell the IPOs to increase their capitals and expand the company. Another reason would be that IPOs are generally much more easier to sell rather than private shares. This in turn increases the liquidity of the shares and makes it much more marketable. And lastly, of course, having your company's name being listed out within Bursa Malaysia would increase the image of the company and in turn attracts a lot of skilled workers. Now, let me explain on how an IPO works. A company would issue shares for the very first time on the primary market as an IPO and sell their shares directly to investors. First investors would enter a ballot and try their luck in buying as many IPOs as possible due to demand being greater than supply. Lastly, the IPOs would be sold to other investors through the secondary market. The secondary market is where most trades are generally made. Why do people invest within IPOs? Well, people generally invest within IPOs because IPOs are priced lower than their actual value. This is actually done by companies to ensure that demand is created when they first put in their shares within the market. Statistically, IPOs being sold on the first day they open gives an average performance of 21.99% at an accuracy of 82.61%. IPOs allows you to obtain the next big thing before anybody realizes it. And lastly, IPOs give investors hassle-free profit for those who aren't especially fond of technical analysis. That is all for today. Thank you very much for watching and happy trading.